The positive trading in the Dow today, the Dow up 115 points, made it more clear that this wedge formation that has been forming in the Dow was remaining consistent. This makes for two simple assumptions. First, as long as we're in this wedge formation, there's not going to be any obvious trend movement one way or the other. And secondly, based upon candlestick buy signals or sell signals, breaching one edge of this formation will tell the candlestick investor which way the price is going to move, and usually with a great resiliency coming out of a wedge formation. Utilizing the information on the other charts, like the NASDAQ, it can be noted that the T-line in this uptrend is still remaining in effect, continuing the uptrend. So we're not getting any evidence that there's any mass selling occurring in these markets. And it can also be seen that there was kind of an evening star signal right here at the last peak of the S&P 500, telling us the uptrend was over, that we are still in a sideways mode. Now our analysis is they've moved it back to the 50-day moving average and the T-line. So depending on how they open it from here, will tell us whether the S&P is still consolidating, maybe back to this level, or if it opens positive, there's a good prospect they could break up through this resistance level. Knowing that the markets are not moving in any great direction one way or the other allows for identifying and getting into positions that have high probability trade results. For example, we recommended Cato today based upon the the bobble breakout. Notice how it came up, failed at the 50 with a sell signal. Pulled back to the T-line, could not close below the T-line, and did a doji above the 50-day moving average yesterday. So very simple analysis, knowing that our doji rule is the price is usually going to move in the direction of how they open after a doji. A positive open today warranted buying immediately, because this candle right here and this candle right here with the doji in between is a doji sandwich, indicating more upside, number one. And number two, when it opened positive, it would confirm that our bobble pattern breakout was in progress. That same scenario was applied a couple weeks ago when we recommended ZSAN, again, a bobble breakout, creating a high probability big trade move. Now the rhetorical question is, do all pattern breakouts provide huge 200, 300% profits? Definitely not. But the benefit of candlestick analysis is that it recognizes when investor sentiment is working the same way time after time, putting you into positions that have a high probability of a big price move. That'll be it. We'll see you in the chat room.